Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Monday. It's August 1st. Can you imagine we're finally in August? I sure feel it. It's like 92 degrees today. It's really hot. I'm finally back from my New York trip, my trip of the summer. I'll be back till Friday in my office. I'm going to go to Washington, D.C. for the weekend, but you guys won't miss much of me. I was here last week for a couple of webinars, and I didn't miss any of my morning videos. If you guys are benefiting from these videos, send me a letter. It doesn't cost you anything. support@marketgeeks.com. Did I help you call the bottom of this market? Send me an email, support@marketgeeks.com. Have I been helping you make winning trades? Send me an email. If you've been enjoying Pattern Trader, I want to hear from you. Really, I'd love to hear from you. support@marketgeeks.com. Or post a comment below this video. Now, let's get into today's analysis. I'm really excited because this August could be very, very different from most summers. As you could see, volatility has been going crazy. And I'll get into volatility in a little bit. Markets are pretty flat right now. NASDAQ is up about 4 points. The Dow's up about 9. This is a nothing market. It's waiting for data. Speaking of data, boy, we've got a lot of data. So as far as the Fed is concerned, this week is not as crazy as last week. I think last week we just had everything under the kitchen sink thrown at us. Consumer confidence, consumer demand, I mean everything, FOMC, GDP, you name it, we had it. This week is going to be a little more subdued. We're going to let stocks show their hand a little more. We've got manufacturing, construction spending, jolts, factory orders, international trades and goods and services, employment situation. The biggest factors this week is going to be international trades and goods and services, ISM manufacturing, and the employment situation. Jobless claims have been fairly steady. Employment situation has been fairly steady. Nothing really crazy there. So I think this week we're really going to see the market kind of stand on its own. But again, keep your eyes on the factory orders. Keep your eye on today's manufacturing report, on Thursday, international trades and goods and services, and on the employment situation. And as you watch all this, keep your eye on the long bond. The long bond right now is not going down. Matter of fact, I think I missed another opportunity to sell it on Friday. But if it goes back to the 119-ish levels, mid 119-ish levels, I'm going to sell it again because I believe it's going to be kind of hovering around here. And as I've mentioned to you back in, let's see here, almost 3 months ago when it started going choppiness and when ARK started moving sideways, I told you guys that the bond market is shifting and the stock market is going to shift as a result. A lot of people thought I was insane, but here we are. We've been now moving sideways without the long bond increasing yield for almost 3 months. And it's all right here. And tech stocks have taken this shape. For example, let me show you XLK. So there's no mystery here. And anybody who's been following me has been seeing the same thing. XLY. You could see this whole thing kind of moving along, kind of getting a little ahead of itself. We'll get into that as well. So earnings this week. We're starting off, last week was the big week. We're now about 60% into the S&P 500, 70% are beating expectations. Nothing is showing signs of a major upcoming recession. It looks like we've been in one, a minor one. These are the expectations, and these are all the companies that are coming out today. You've got ATVI, you've got Avis, you've got Builders, you've got CF. This is a pretty important stock. Just to kind of Devon Energy's coming out today. Really, this stock was the most strongest stock first half of the year. Let's see here. Jacobs Engineering, Leggett & Platt, Mosaic is coming out today. Got a lot of stocks coming out today. A lot of stocks, even World Wrestling Federation. Now, tomorrow's a big day. You've got AMD. They're expecting $1.03 per share. That's up 63% year over year. So keep your eye on semiconductors and tech. Aside from that, you got Caterpillar, Caesars, Cirrus Logic, Cummins, DuPont, EA, FMC. A lot of big companies are coming out with earnings, a lot of them. And I'm kind of going through this so you can see, and I'll go through this in my VIP room today. PayPal's coming out with earnings tomorrow. Starbucks is coming out with earnings tomorrow. Uber's coming out with earnings tomorrow. Wynn is coming out with earnings tomorrow. And here you could see their EPS, negative, positive. You could see all of it. Then, and again, I'll go through this as we get further into the week. I just kind of want to show you everything that's on. But the big reports this week is going to be Square on Thursday, they're looking at 17 cents per share, 74% year-over-year decline. And DraftKings is looking for 83 cents per share, 9.2% down. All of these negative estimates. And then again, as I mentioned, we have AMD that's coming out tomorrow. So AMD, Square, and DraftKings, those are the big highlights for the week. But again, we've got Cuervo, Sunrun, Store Capital, Under Armour. These are the New York Times, Monster Beverage. And I'll go through this every day as we have what's on the table. But again, today you have Activision, Avis, Builders, CF Industries, Devon Energy. This is going to be very important for energy. Diamondback Energy, Mosaic, Pinterest. That's interesting. On Semiconductor, another semiconductor stock, and World Wrestling, and Simon Property Group, another one. A lot of big stocks. So it'll be interesting, and I'll give you a full earnings update after today's session. Now, here's another thing that's very interesting. Volatility. Volatility is going down. We're breaking levels we haven't seen since April of this year. So this is really, really positive. And the question is, are we going to continue moving higher or not? Now, here's the part that's getting me a little squirrely here. If you look at this is the communication discretionary sector and communicate and tech. They look the same. They're breaking up to the upside. The problem I have is this. The bond market is not breaking up to the upside, and all of these have been following the bond market. The bond market's staying within range. These stocks are breaking higher. I don't think they have what it takes to continue breaking higher. I think they're going to come back to the base. So I'm expecting more choppiness because I believe the stock market is going to follow the bond market for the foreseeable future. So don't expect these stocks that are really gaining right now to get like, let me show you what I'm talking about. Where is it here? Technology. See, technology really getting ahead of itself. I think we're going to cool off a little bit. Don't be surprised if we cool off. Matter of fact, if you look at communication services, we already really started coming off. So I wouldn't be surprised to see consumer discretionary shed a little bit. What I am looking at is I'm looking at healthcare. Look at this ascending, nice little ascending action here. Industrial is looking good. Energy starting to look good again. Consumer staples is looking good again. So to me, it looks like tech got a little overdone last week, got a little too much excitement. And I think tech is going to cool off. It looks to me like these stocks gained a little bit too much too fast. They can't supersede that 8.6 CPI that we had that took the market to new lows. That's that area right here, the 442 on technology. We went as high as 440. On consumer discretionary, we actually did go to that level. Look, all the way up here, but it didn't stay. And I told you this was going to be the level we need to pay attention to. And I quite honestly don't think we can break above this level because the long bond is not ready to go higher. The long bond is still choppy, which means we're not ready for a bull market just yet. And all of these stocks that were really strong last week, the tech stocks, I think they're going to see a slight reversal of fortune. With that said, look at healthcare. Look at XLV right now. It looks really good around here. Let me, I like this ascending triangle where we have with it right now. Actually, I like it a lot. Let me just remove all this crap here. Yeah, you see, there's my ascending triangle. I like this. I think we're going to go higher a little bit here. I think this is due to break out. And that's healthcare. Now, if you look consumer staples, they look more stable. They look like they were basing out before coming on here. See, I like this. I like this. I like what we're seeing here. And notice it didn't run up from here all the way up here like we saw with these stocks. They've been kind of basing, moving up slowly. Look at that. That's too much too fast. I think this is going to come back down on XLY and XLK. See, I think this is way, way too much. Way, way too much. I think all of this is going to get undone. And I think what we're going to start seeing is the defensive stocks, the XLE, these stocks, the XLF, start moving a little bit higher once again. So in my opinion, when we look at this cumulatively, when we look at this cumulatively, energy, utilities, healthcare, industrial, technology is backing away, and technology and consumer discretionary are apart from each other, which means they're fragmented. And typically when they're fragmented, it's too much, too fast. So right now, I think we're going to be seeing some downside. I would be right now probably selling some of the stocks that are in a strong downtrend that went higher last week, that are in the technology and consumer discretionary category, because they're fragmented. On a monthly basis, they ran up real hard, consumer discretionary, technology, and I think they're going to come back down. So I would be very, very cautious with these stocks, and I would be more looking at industrial right now, at real estate, at basic materials, at financial, even utilities, energy. I would be very, very healthcare. I like healthcare and consumer staples a lot. I like these two sectors a lot right now, because look at what they've done. Just basing. And because look at communication services. It already looked like it's going down. So be very, very careful. And remember, the bond market is not breaking out higher. It's still moving choppy, sideways, which means most stocks, unless they're defensive, are going to continue moving sideways. Now, the biggest thing I would look for right now is this. I'm going to show you guys this right now. Show you some insider stuff. Look at 547 stocks making 20-day highs, 21 stocks making 20-day lows. A lot of these stocks that make 20-day highs, especially a lot of the tech stocks, are going to start cooling off in the next couple of days. My suggestion to you is start looking at the weakest ones and get ready to sell them. And if you're in my members area, I'll be giving you those throughout the week. But I think we're going to see some choppiness and some consolidation, because I don't think the market is ready to turn much higher yet. I think the sentiment is getting better, but I think the market needs to cool off. I think this gain in tech and consumer discretionary is coming along a little too fast, too much. So I'll be updating you on that this week. I think it's time to cool off the fun stuff and get back into the boring stocks for a little bit. And maybe I'm wrong, but if I'm right, we're going to get some downside pressure from the speculative stocks this week. Now, folks, if you missed Lance's master indicator demo last week, make sure to click the link below now, since he's about to go live again. He's showing off his new indicator in action. In fact, be ready to submit some tickers and he'll pull up the chart. This is very, very cool. It's interactive. It's live. Lance is there. He'll literally pull up the tickers for you and show you what the indicator is showing. That's very, very cool. And if you want the formulas that underpin the indicator, he'll even share that with you. I got to check this out. I love these indicators. And if you simply want to use this indicator yourself, he'll show you how to install it on your platform. Man, this is awesome. Lance is like, talk about transparency, right? He's showing you the indicators, he's showing you how it's made, he's showing you stocks that are hitting it, he's showing you how to install it on your platform, he's telling you the rules behind it. I mean, what's left there to do except follow the link below and check out Lance. And in his Blitz program, the guy's been like 11 for 11 winners. He's been doing really good. You got to check out Lance. Red hot. Click the link below to see Lance's master indicator for yourself. Do it now and send me some love letters. I haven't heard from you in a while. I miss all of you. Bye, guys. Have a great, great day.